What's in store for the markets in 2024? No, I'm not trying to make any prediction over here, but what's the sense and pulse of the market and world economics hinting towards? Let's decode all of this. Today I have with me Kalpen Parekh, MD, CEO, DSP Investment Managers. Kalpen, good evening and welcome to the show. And first of all, a very happy new year to you. And Kalpen, as we begin this new year, what would you like to say to those investors specifically who would be anticipating the same market momentum that they saw maybe during Diwali or during December, the Christmas rally? Past returns is definitely not a guarantee of your future returns in the market, and we all are aware of that. But then today the numbers that we saw, 17,600, and even the mutual fund AUM has crossed beyond 50 lakh crores. So we have a good news over here. But then what about investor sentiment who might be expecting the same 2023 year, the same kind of market momentum and paciness?
Hi, Kavita. Happy New Year to you and the viewers. See, markets don't deliver returns in line with what our emotions or our expectations are. They are very random in the short term. And in the medium to long term, they reflect two things. They reflect the growth of profits and they reflect the price that you pay today. Is that price fair or unfair? So if investments are done in proper growth rate businesses, companies or economies and at the right price, reasonable returns can be made. And I think that is the simple rule. Short-term triggers like the industry crossing 50 lakh crores or SIP numbers rising or falling, these are of course some variables, but I as an investor personally don't look at these things. As an investor, we are here to fulfill our long-term objectives, our personal goals, beat inflation, earn superior returns, then our build our purchasing power. And ultimately, equity as an asset class delivers that over a long period of time. 50% of times, there are chances that annual returns can be less than fixed income, and that is what the last 35 year history has shown. Now, which year will give that lesser return? No one can predict that in advance. Generally, we've always seen that when markets deliver much higher returns than the long-term returns of 12 to 14% that one has seen over 30 years, is a time to be a little bit cautious and moderate your return expectation. So we encourage more investors investing in India because penetration of equity as an asset class, equity is nothing but growth, is far lower. And thanks to various efforts in the last few years, more and more investors are embracing this journey. In this, there are two sets of investors. One who will be very long-term in nature, who are investing through SIP and disciplined asset allocation. They will generally benefit from the long-term growth as well as intermittent fluctuations. And there will be some short-term investors also who have to then rely mostly on luck that, okay, if this year also the same run of last year repeats, they should be happy. But we should be ready that, one can have moderation of returns because we've already seen a sharp run up. Valuations have, crossed certain threshold average numbers. And many pockets of the market, especially small and mid caps, do look expensive because more money is chasing less number of stocks.